Good morning and welcome to the Killik & Co market update. We're now well into corporate reporting season and our research team has been very busy analysing lots of results. Markets were actually quite buoyant in the run-up to this reporting season. Here you can see the S&P 500 over the last year. As of Wednesday this week, 34 of the 500 companies had reported, and of those, 82% had reported results that were above expectations. 3% met expectations and 15% missed. There had been some concern about corporate profitability given the ongoing high input costs and high interest rates, so it's great to see so many positive surprises in terms of earnings. There's been particular focus on the financial sector for this reporting season, given the problems that we've had with Silicon Valley Bank and Credit Suisse. So far, 10 financial companies from the S&P 500 have reported, and of those, 80% have reported results that were ahead of expectations. JP Morgan in particular has reported earnings per share that were 56% ahead of last year. The bank has benefited from higher interest rates because it's been able to charge more on loans. There have been quite a few bids for UK companies recently. In the last 2 weeks alone, these 5 companies have been bid for. SureServe, this was only announced this morning. The Hut Group, which only listed in 2020. Network International, Dechra Pharmaceuticals and John Wood. The flurry of bids does support the view that UK companies are attractively valued at the moment. It also supports the view that sterling is relatively low in comparison to other currencies. Here we've got sterling against the dollar over the last 10 years, and you can see that sterling has strengthened since last year when we had that mini budget, but it's still significantly below where it was in 2014, and that will make UK companies look cheaper to overseas buyers. And finally, Apple has launched its first 2 stores in India this week, which says quite a lot about the growth of the Indian economy. Here's GDP per capita, or economic output per person, for India versus the UK. The figure for the UK is over $40,000 per person, but for India it's a fraction of that. If I show the same data but without the UK, you can see that Indian GDP per person has risen quite sharply in recent years, and it's now over $2,000 per person. Apple phones are quite expensive at several $100s each, so you can see why there's been a limited market for them in India to date. The current market share for Apple in India is around about 5% compared to over 50% here in the UK. But as the GDP per person in India starts to grow, Apple is clearly hoping to raise its market share in the country. And moving on to look at next week, it's looking very busy on the corporate calendar as we continue with corporate reporting season. And we're looking ahead to results from Microsoft, Alphabet and Amazon. That's it from us. Enjoy the weekend and we'll see you next Friday.